For years, the titans of traditional finance kept their distance from cryptocurrency. They watched the rise of blockchain and decentralized assets with skepticism, treating it as a trend that might fade with time. But things have changed. These giants are no longer on the sidelines, they are finally stepping into the world of digital currency. And among the most significant moves is Bank of America's entry into the stablecoin space. Bank of America, one of the most established institutions in global finance, is now actively developing its own stablecoin. This isn't just another corporate experiment or a passing tech initiative. It's a monumental shift, proof that digital assets are maturing and integrating into the financial systems we rely on daily. Their move sends a clear signal: cryptocurrency is no longer fringe. It's entering the core of the global economic structure. When a powerhouse like Bank of America adopts blockchain, it validates the entire space. It brings with it a sense of legitimacy that even the most skeptical observers can't ignore. This effort doesn't just bridge two technologies, it connects two different financial philosophies. On one side is the world of traditional finance, centralized, heavily regulated, and often slow to change. On the other is the fast-evolving ecosystem of decentralized finance, or DeFi, where transactions are direct, fast, transparent, and open to all. Now, these two worlds are meeting in the middle. Stablecoins like the one Bank of America is developing represent that intersection. They promise to combine the stability of fiat money with the efficiency and transparency of blockchain. The implications are massive. Imagine sending money to another country as easily as sending a text instantly, without the high fees or waiting days for processing. The demand for faster, cheaper, and more reliable payment systems is driving this change. For years, the crypto community has been building the infrastructure for a decentralized future. Now, traditional financial institutions are catching up. They're realizing they can't afford to ignore blockchain's power to reshape everything from remittances to retail payments. This evolution isn't just about new tools, it's about control. For centuries, financial systems have operated with gatekeepers. Banks and governments decided who had access, who could participate, and on what terms. With blockchain, that power begins to shift. The network becomes the gatekeeper. No longer does access depend on geography, background, or wealth. It depends only on a connection to the internet. The transformation we're witnessing is as much philosophical as it is technological. It's about reimagining what money is, how it works, and who gets to use it. From barter to coins, paper money to credit cards, every era of finance has brought about new possibilities. Blockchain is the next leap. Not a small step forward, but a radical rethinking of how we store and transfer value. Digital currencies like Picoin are part of this change. Pi Network is not just another blockchain project, it's focused on accessibility. Instead of requiring expensive mining equipment, it lets users mine coins directly from their smartphones using social trust. That means millions more people, especially in underserved regions, can join the digital economy without needing deep technical knowledge or financial investment. What sets Pi apart is its focus on utility and real-world integration. It's about bringing crypto to everyday life, something you can actually use rather than just speculate on. As the concept of GCV, or Global Consensus Value, evolves, Picoin aims to maintain a value benchmark, with community consensus pushing it to levels as symbolic as $314. While this valuation might be aspirational now, it reflects a community vision of value rooted in usability and trust, not volatility. Adding to the growing ecosystem is the idea of a Pi Bank. A decentralized finance hub where users can interact with their Picoins for lending, savings, and transfers. It's part of a bigger picture, an ecosystem where people don't just hold crypto but use it like any other currency, to buy, sell, borrow, or invest. All of this is happening in parallel with developments from major banks. The convergence of these trends tells us that the future of finance won't belong to any single system. It will be hybrid. Some will trust central banks and stablecoins like Bank of America's. Others will prefer the autonomy and transparency of decentralized platforms like Pi Network. This dual approach creates options, and options create empowerment. Whether it's a government-backed digital dollar, a bank-issued stablecoin, or a community-managed crypto token, the tools are emerging to fit different needs. We are entering a world where users can choose between central authority and decentralized networks, between private systems and public ledgers. The key is transparency. In traditional systems, a single failure point can cause massive disruption. With blockchain, data is distributed across thousands of nodes. That decentralization increases security and reduces the risk of manipulation. Transactions are visible, traceable, and almost impossible to tamper with, creating trust through code rather than human oversight. The ripple effects are already being felt across industries. In supply chains, blockchain tracks goods from origin to delivery. In art, it verifies ownership and prevents forgeries. In gaming, players can truly own their in-game assets. Even in real estate, tokenized property titles could one day replace paper deeds, making transactions faster and more secure. In hospitality, blockchain could enable digital room reservations that can be transferred or resold as easily as sending a message. This innovation isn't just about money. It's about digitizing trust in ways we couldn't have imagined before. So when Bank of America launches a stablecoin, it's more than just a tech announcement. It's an acknowledgement of this global movement. And when projects like Pi Network empower people to mine and use crypto from their phones, it's a democratization of finance, giving access to those who've historically been excluded. This is the beginning of a new financial era. One where borders mean less, middlemen fade away, and everyone can participate. Whether through a phone in Africa or a stablecoin in New York, the revolution is becoming real. The future of money is not some abstract idea in the distance. It's being built today, one line of code at a time, one transaction after another. And in this future, we're not just spectators, we're participants.